Hello, you're watching Money9, and on Money9 you're watching Saral Money. My name is Sharad Kohli, and it is our endeavor, it is our effort to make those complicated financial and money terms as easy as possible for you. So do you ever wonder, if these terms were made easy, how much your life would have been simpler and profitable? So let's talk about something very interesting which has always been fascinating you, that how to buy a share in stock market, how to enter stock market, and how to select a share in stock market, because you keep hearing about people who make tons and tons of money in stock markets. In fact, some people don't do anything else apart from making money in stock markets. So why don't you make a beginning? And I'm sure you're going to be tempted to do that after this short capsule. So when we talk of buying a share in stock market, your journey starts with opening an account with one of the recognized brokers with National Stock Exchange or Bombay Stock Exchange. You set up an account with him. You need to set up a demat account where you're going to park your share after you purchased. So you make a deposit with the broker. The broker obviously depends on what kind of shares you're buying, how many shares you are buying. Once you've decided on that, obviously in the beginning, it is my advice that you consult an expert to start with. Obviously, as you progress, you may not need an expert later, but you start with an expert so that you don't end up picking something which blocks your money, or you end up incurring a loss. So your journey starts with a broker. You open an account, you get an ID, you get a password, you deposit some money, and you buy the stock. Now, the billion-dollar question is how to select the stock. Although I said that it is better to consult an expert, but let's, through this short capsule, guide you on that. I think the best stock to carry home would be the one where the company is trustworthy, where the company has got a very solid management, where the company has got a very strong balance sheet, where that company's business is tomorrow's business, which is, we call it as a sunrise business, which is the business is growing in this era when there are so many sectors which are, some are flourishing, some are not flourishing. So when you pick up a stock, you need to keep in mind that the company's or the share's book value is not overly rated. The company's EPS, we call that as PE ratio. Now, if these terms are sounding complicated to you, don't worry. I mean, you can always come back right in the inbox and we'll be happy to answer. But make sure that the share you are buying is not overvalued. The share you are buying is not overpriced. Now, as you progress, you will gradually start learning, but the company's strength is the key to buying a share. Sometimes even overvalued, overpriced shares are still very attractive because the company's reputation, the company's brand, the company's business is really so big that even an expensive share is not expensive. And sometimes it's the other way around. A very undervalued share, a share which is not that expensive, may just stand there for months together, sometimes years. It may not move just because the company's reputation or the company's brand may not be as good. Another aspect which determines the price of a share and which should make you buy or not to buy is the liquidity of the share. The share is very liquid. Liquidity means that the share is being traded more often than other shares. So the share changes hands more often than other shares. Obviously, you will find that the share tends to move in terms of price sooner than you expect. So these are some of the basics which you need to keep in mind. Obviously, the subject may require little more expertise, but I'm sure if you are a regular follower of Money9 and Saral Money and some of the other capsules, you will learn them better and sooner than all the other people. So keep following Money9, keep following Saral Money capsules, and I'm sure you will get into making money quicker, sooner, and much, much more. Thank you.